Good morning, and thank you very much for joining me. This is the morning market review. We are late today. You can see that I have scheduled it at 20 minutes to the top of the hour. We are now at the top of the hour. Uh, just couldn't quite find the link I'd set up. Nevertheless, we shall endeavor to do the morning market review now, and we shall carry on tomorrow from 7:40 a.m. GMT. My name is Russell Shaw, I'm a senior market specialist at FXCM, and I'm just going to go ahead and bring up our disclaimers. And if you can just spend a few minutes going through the disclaimers, and then we'll get on with the morning market review live stream. Okay, I'm going to just bring up the next disclaimer. So this is the high risk investment warning. Just take note of the market commentaries disclaimer. All right, and what we'll do now is we'll take a look at the real rate. All right. So the real rate's where we start our analysis. Is regarded as a key driver of the market, and it's changed up completely given the non-farm payroll and the jobs data that came out on Friday. It was much stronger than anticipated. The non-farm employment change came in at 353,000, which was almost double the anticipated 187,000. Not only that, the previous number was adjusted higher to 333,000. So all round strong non-farm employment change. The unemployment rate was expected to be at 3.8%. We came in lower than that at a stronger 3.7%. And the average hourly earnings, which is effectively a measure of inflation, came in double the expected. Came in at 0.6% month on month. We were expecting 0.3% month on month. So all around, very strong jobs data. And what it's done is it's changed up the non-farm payroll. I beg your pardon, it's changed up the real interest rate. And what you can see is we were looking for a reference candle reversal last week before the jobs data, and we almost got it. Reference candle reversal requires it has three conditions. Hey Mia, good morning to you. It has three conditions. We have a candle that's got the highest high and at least three candles. The candle to the right takes out the lowest, the low of the reference candle. We got that. And then condition 3, it's got to close below the low of the reference candle. We did not get that. In fact, we got price really reversing off of the lows of, let's call it the yield, really reversing off of the lows of last week and pushing up higher and closing well within the range of that reference candle. If you take a look at the RSI was looking to breach the upsloping green trend line. It didn't. It reversed and now is back above that green sloping trend line. So the jobs data was surprisingly strong. I was very surprised by just how resilient and strong that jobs data was. And fundamentally, the market changed up after that. And how did it change up? Well, we'd already had the Fed announcement on Wednesday, which seemed to push back on the March interest rate cut. Friday's jobs data all but killed it, right? So there won't be a rates cut in March, and the real rate has now pushed higher. And in effect, what this does is it puts in a reference candle, a bullish reference candle, and if the yield closes above last week's high, then we've got bullish pressure to the yield. And if there's bullish pressure to the yield, that can flow through to the greenback and support the greenback. You can flow through to the risk markets and add a headwind, a pressure to the risk markets. So let's take a look and see how we are setting up as the cash markets have just opened about 6 minutes ago. Let's see what's going on with regards to the reaction. How are the markets reacting this week? How are they starting this week to such a I would call it an anomaly. It's really was strong data. Let's start off with the DAX. Let's see what's happening with the DAX. Okay, so what we shall do is take a look at the DAX on a weekly time frame, and let's just see what the technicals are suggesting here. Okay. So the DAX still looking. Hey Raj, good morning to you. Welcome, and apologies we were late today. We'll revert back to our normal time tomorrow. You can see that the reference candle, the bullish reference candle here, is still very much in force for the DAX. Take a look at last week's candle on a weekly basis. What do we have there? We have effectively what we call a doji star, right? You've got bulls that try to take price up. You had bears that try to take price down. Where did we close for the week? Flat for the week. So it's a candle of uncertainty. It's not first price, because if you take a look at the candle week before, we had a strong bullish impulse up, which effectively closed the bullish reference candle. And if we had followed through from last week, that would have added to the bullishness. But it's a candle of uncertainty. Not surprising given how strong that jobs data was and the reaction in the fixed income market. Nevertheless, we're not getting an outright bearish candle here just as we start trading. There's a little bit of buying support as we started the day. Let's take a look at the zone, where we're in the zone, right? So we'll go through to our daily chart and just take a look at the DAX relative to our three zones. Okay. I'm just zooming in. I think it will be easier for us. Yeah. All right. So what we have last week, let's bring in an arrow here. And when I say last week, I meant actually on Friday. Friday's candle is a doji again. Okay, so candle of uncertainty. But where we positioned, we are positioned in zone 1. And look, there is a buying tail that is starting to emerge on today's candle. And the RSI is above 50. So it suggests to me that there is still some bullishness in the daily DAX chart. Quite surprising given how strong the jobs data was on Friday. Let's go down to the hourly, see if the hourly chart's giving us anything to work with. Okay, so just bear with me. We'll go down to the DAX hourly chart. Okay. Let's just let's take out the drawings. Yeah. All right. So and we basically flat from when the dollar open for the week to where we're trading right now. Let's just take a look at the daily chart. I would suspect, given how strong the dollar is, that we are going to be in zone one. Okay, so let's just bring that up. All right. I'm just zooming out a little bit here. We're right at this resistance area. Now we're in zone one. Okay, we're in zone one. We moved from zone 2 into zone 1 because of that strong jobs data. And then you've got this big movement up here in the RSI, a big momentum shift up because of that strong data. But we've gone right into this resistance area. Let's take the wedge out. I don't think that the wedge is in force anymore. I want to see now if we remain in zone 1, and if we remain in zone 1 and take out the resistance, then there is pressure on the there's tailwind pressure for the greenback. In other words, there's something supporting it, something keeping it afloat. And if there is a dollar that's appreciating, well, obviously the other majors are going to be under pressure. But then I suspect that eventually we're going to get some headwind pressure for the risk markets. Okay, let's just take a look, see what's happening on the hourly chart here for the dollar. Oh, this is interesting. This is very interesting. So you can see the response of the dollar to the strong jobs data. So there's a really big movement up here in the US dollar, but it's tapering. And just watch this. Just watch this taper here, because we're getting that risk on movement in the DAX. If there's going to be a follow through swing on the DAX, I would like to see the dollar cross down. We've already got a cross down in the stochastic, so some momentum coming off of the haven, potentially feeding through to the risk side, the DAX. Let's just take a look at a few other instruments to see how the day is starting. So we'll start off with gold, and then we'll move to some of the US indices. Let's just take a look at gold. And we're going to just take a look at gold on the hourly time frame just to see how it is behaving at the start of the week. Okay, so there's still pressure on the yellow metal. Still pressure on the yellow metal. In fact, we've got the cross down here, and it is still very much a sign that there's a bearish momentum that's building. As long as we hold that lower quintile on gold, then there's potential dollar pressure to the upside. And if there's dollar pressure to the upside, I'm not sure how long the DAX can maintain its bullishness. Then I think that bullishness on the DAX is questionable. Let's just go back to the DAX to show you what I mean. Okay, can you see that the crossover we're talking, and you can see there's a little bit of a selling tail that's starting to appear. I'll just zoom in and show you. Can you guys see that selling tail that's starting to appear? So if the dollar builds, gold pulls down, then I think there's pressure on the DAX side of things. So just be aware of that. Let's just see how the Nasdaq and the S&P are looking. We'll do a top-down analysis here. Let's take a look at Nasdaq first. Sorry, I'm just adding in the moving average, which seems to have strangely disappeared. All right, let's share the screen. This is the Nasdaq. All right, so Nasdaq ended the week strong. It's very flat at the moment. We've got a very, very short candlestick, so there's no real excitement. And I think there is that worry with the way the yields are behaving. We are above the 30-week exponential moving average, and the RSI is above 50, perhaps tending towards that overbought area. Let's just see what's happening on the daily chart. So we are in zone 1. So there is bullishness on the Nasdaq. Again, there is uncertainty, and that I think is the key sentiment marker. Uncertainty. Last week Friday, that's the second last candle. I'll just put an arrow there. You've got, although you do have a candle that's got a higher high and a high low, there is a sense of uncertainty. It is a candlestick. And then today's candle is all inside of Friday's range. It's called an inside candle. So now an inside candle is also a candle of uncertainty because the bulls don't have the fortitude to take out Friday's high, but the bears haven't quite come in yet to take out its low. So we've got two signs of uncertainty. Friday's spinning top and today's inside day. And we just want to keep an eye on that in terms of our hourly. Let's go through to the Nasdaq's hourly. And then we'll just end off with the S&P 500's hourly. But if we take a look at the Nasdaq's hourly first, all right, so remember this is a dual trigger system. So we've got 1 out of 2. We've got 1 trigger out of 2. So the 5-hour exponential moving, that's the green 5-hour exponential moving average, is above the orange 10-hour exponential moving average, but there's no momentum. You see there's no momentum here. Okay, you'll need to get the stochastic to cross over. If the stochastic carries on moving downwards, I think the momentum is the primary driver. It will pull the EMAs with us. Let's just take a look at SPX. So certainly uncertainty, I think the overwhelming adjective as we start off the week. All right, and you can see on the S&P, it's similar to the Nasdaq. What I mean by similar to the Nasdaq, well, you've got the trend following EMAs showing some signs of bullishness. It's just not being reflected in the momentum. That momentum's also pushing down. So just to conclude, if the dollar carries on pushing higher, gold carries on pushing down, I think the DAX is going to hit that wall of resistance. I think that we're uncertain at the moment. But if those are the tendencies, I think the risk market tends to be pulled down. So just be very, very careful out there today. All right, that's where we'll end this morning. I apologize, we were late. I just had an issue accessing the live stream, but from tomorrow we go back to 7:40 a.m. GMT. If there's any questions, now's the time to pop those into the chat. Any questions, please pop those into the chat. I'll just wait a few seconds. All right, nothing coming through. Let's conclude here, guys. I want to wish you all a great day ahead, great evening, and we shall chat tomorrow morning. Thank you very much, all.